In our last video, we covered the first steps of your investment journey. Now it's time to understand the what. You hear the words stocks and bonds on the news all the time, but what do they actually mean? It's much simpler than you think. Let's break it down. To understand stocks and bonds, let's imagine a popular local coffee shop. The owner wants to expand and open a new location but needs money to do it. They have two main ways to raise that money. First, the owner could sell small pieces of the company. These pieces are called stocks. When you buy a stock, you become a part owner. You own a tiny slice of that coffee shop. As an owner, if the coffee shop does well and makes a lot of profit, its value goes up and so does the value of your slice. You win when the company wins. However, if the business does poorly, the value of your slice can go down. It's higher risk but offers higher potential for reward. So, think of a company like Adidas. When you buy a share of Adidas stock, you actually own a tiny piece of the entire global company. Their success is your success, you know? Now, for the second option. Instead of selling a piece of the shop, the owner can just borrow money. When you buy a bond, you are essentially lending money to the company. You are, in a way, acting like the bank. In exchange for your loan, the company promises to pay you back the full amount on a future date. Along the way, it pays you fixed, regular interest payments. It's generally safer because you're a lender, not an owner. The trade-off is that your potential return is usually lower than with stocks. It's not just companies. Governments also issue bonds to raise money for public projects. Buying a German government bond, known as a Bund, is considered one of the safest investments you can make because you are lending money to an entire country. So let's recap the key difference. A stock makes you an owner hoping for growth. A bond makes you a lender receiving interest. It's the classic trade-off. Stocks offer higher potential rewards for higher risk, while bonds offer more safety for lower, more predictable returns. So, which one should you choose? The great news is you don't have to pick just one. Most investors own a mix of both. Now that you know the difference, you're one step closer to making smart investment decisions. If this simple explanation helped you, please give this video a thumbs up and subscribe to Invest with Enamul. But what if you want to easily buy hundreds of stocks or bonds all at once? That's where ETFs come in, and that's exactly what we will cover in the next video. You won't want to miss it.